Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday morning market webcast. Okay, let's start with the daily chart. And what you're seeing here is the green line, the daily mid-band, the blue line, the 9-day. You're starting to see for the first time this Friday things becoming resistance. If the daily mid-band wants to be resistance, what is typically next is lower band. We talk about this all the time. Upper band, middle band, lower band, lower band, middle band, upper band. Well, recently it's been upper band, middle band, upper band, middle band, upper band, middle band, because the bears just haven't been able to generate anything below the green line. Well, now they have. And we've gone down to test the daily lower band on Friday. We've done it again in the overnight today. We did a full test of the 50 EMA on Friday. That's the red line. Fairly close this morning. We've done as deep as 82.5. The significance of being and living below the daily mid-band is that you end up in sell rallies mode. That your baseline assumption is no longer buy dips, it is sell rallies. When the market wants to live above the green line, we buy dips. When the market wants to live below the green line, we sell rallies. So what was a good example of that? Well, last night we had multiple moves up to 96. I think the best they did was right off the open. They did 98 quarter. Then they came back and they did 97.75. You can see it bumping its head on hourly mid-band resistance. This is an hourly chart. They could not get through 96, and then it gave way to the move down to 82. Sell rallies, sell rallies, sell rallies, sell rallies. So what I'm interested in now is the hourly mid-band going to continue to be resistance on a test, and we have a potential higher low versus the monthly pivot test on Friday. That's going to have to get taken care of by the bears. Otherwise, dip buyers will become emboldened, and we may end up in a nice little face ripper. But you can see what's happened here. Plenty of trips up into the 2940s, inability to take out the all-time high at 47, and then you just see it. Down, lower high, down, lower high. Tried to go down, faked everybody out up here, and then they dumped it. Lower high, now a higher low. So the thing is, when it stops doing lower lows, you have to be vigilant. You got to take profits. It's been very two-sided. We did 40 handles in the room on Friday, just trading both sides of it. If the market, in a tilt down, wants to move in 10, 12, 15 handle chunks, that kind of trading volatility is ideal. So just, take your opportunities where you find them. Don't be afraid to get back in on the other side of things, because in our rules in the room, it's giving us enough of the volatility to get paid, and then it heads down or it heads up, and we're able to take, really good trades out of the market. Where you can get hurt in this kind of a tape is by getting stubborn. Don't be stubborn. Don't be stubborn. Simple as that. So that's where we are. You have a new weekly pivot up at 29.0433. I think at some point during the course of the week, maybe even today or tomorrow, it's going to get tested. Okay? The issue becomes, after it gets tested, what is it going to do? Is it going to hold as resistance? Is it going to trade above? Are the bears going to blow it again? Ultimately, the bears can't blow it until they convert daily mid-band, and that's still up in and around the area of the monthly pivot up there at 29.12, 29.14. All right, everybody have a great day. We'll be out with a bunch of stuff on social, more video updates. Until then, have a great day and trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.